Hi, this is Randy Finney with Right Side of the Chart, and this is a mid to late session update for Friday, December 5th, 2025. Just figured I'd get one out. What I'll do in this one is a very quick update. Had a lot of questions finally on the natural gas trade. I was beginning to think nobody was in that one. There weren't a lot of comments. Somebody made mention about they trade futures as well, like I do, so I shared those charts. I don't always post them. It's a function of if I'm not getting a lot of feedback on a trade, comments, or questions, then I'm assuming nobody or few are in it. And then, as I said to that reply, if you want to check those out, let me show they're on the site. Here in the comments, actually, might even be back, and some might be in here. Yesterday, we hit that fourth target. Today, we hit the fifth target. And I also, clarified as I like to do. I think there was another question, but I think they figured they answered their own question. Here, asking about T5, why it's different from T6. Two different time frames, two different trades. They're both bullish. Obviously, one's just a typical swing trading time frame. I always say that there's no hard definition, but I typically swing trades are defined as withholding periods measured usually in around a few weeks average, but it can vary anywhere from a few days if it's explosive in nature before the targets are hit or the minimum targets or the max targets, and sometimes they take months. And then what I call longer term swing or trend trade. A trend is just that you're trying to capture the bulk of an entire trend, including the counter trend moves. And so those are trades measured at least in many months and sometimes even years. That's the difference. So I'm just going to answer these questions because I see that, do you expect a pullback here? Yes, I answer that. Cold, I've said this often. I'm not a big fan of the, first of all, I prefer futures for several reasons. Especially with natural gas, more so the fact that, these ETFs and ETNs that are tracking natural gas or commodities, they have expenses and fees that you wouldn't have if you're trading futures. Now, I get it. Futures aren't for everyone. You need to know how they work, how to roll them, and expiration and leverage factors. But there are, for natural gas, as I often mention, there's, the regular contract NG, that's natural gas futures. I always put a little slash before my futures contracts. And then QG is just the mini or micro, whatever it is. It's just it's the same exact charts that I post on NG, but you just have a smaller leverage factor. So again, it's good for those that might have the smaller size accounts and want to get into trading futures. But these guys, and the thing about natural gas, today's a good example. We were up over 10%. I've seen natural gas go up 15. I've seen it go up 20% a day. And guess what? I've seen it do it again the next day. Sometimes the day after that, another double-digit single-day gains. And it's like trading the VIX. I've said this often. They have those VIX ETFs or ETNs out there, or ETFs, ETNs that track it, and they have the leverage ones. It's like putting, going to the Porsche dealership, buying a 911 Turbo, and then taking it to the, down the street to your mechanic and telling them to put nitrous oxide in the damn thing. It's not needed. You got more rope than you need to hang yourself. So I'll just stop there. So if that's your cup of tea, these things work fine. These leveraged ETFs work even better than the non-leveraged in a what I call a unidirectional trend, where you just go up day after day with very few, counter trend, like red closes against the trend. And I explain that. If you're new to this trading, new to the site, I do a great explanation. I did it years ago on here. Go to the FAQ page, frequently asked questions, ETF related questions, and read this one right here. Is there a disadvantage of holding a leverage ETF or exchange traded product for an extended period of time? And this is where I talk about how you can actually do better than expected. These things get a lot of criticism, but again, you need to really have your trading skills and chart reading skills honed. I try to speak to that, and I did recently told you that I thought when we exited T1, we'd hit that, what I call that point where natural gas really starts to go up, and what I call kind of get lit up, if you will. And I'm going to show you that in a second here. So either way, we overshot T5. My comments were in there when someone asked earlier this morning about whether we'd have a pullback or not. And my answer was yes, I think so, most likely. We are in that point where it can really start to rip. Here, let me show you that real quick, and then I'll get to my... and then these are the longer-term swing and trend targets on the daily time frame. And as I usually put on here, where is it somewhere? I usually have it on the chart. I think I have it on the 60-minute chart. Best to align, back here. Best to align was on the last trade. Best to align UNG targets with those on NG. And what I mean by that, NG is the pure play. NG is the thing that UNG and Cold and Boyle, they're tracking. They're tracking they're literally buying and investing in natural gas futures, but they're big. They're ETMs, ETFs. They got to roll them at different dates. They can't roll all their contracts on a single day like you or I can, and so they're not as easy to maneuver. Think of the way that when mutual funds and hedge funds get too big, their performance starts to suffer. They can't trade like I do. I'll sit there and trade the NQs back and forth, or a single stock, sometimes 3-4 times in and out, long, short in a day. They can't do that. They can't move big positions that fast. They'll move the entire market, or that, especially individual stocks. So smaller traders, smaller funds for active trading, they're more nimble and they have advantages over those big funds in that aspect, of course. And so these are the longer term, what I call trend targets. The last trend we milked with almost perfect impunity from right off the lows here. Again, I believe it was based on the 60-minute chart. Got in early. Maybe it was down on that little downtrend line wedge break there, and we hit with near perfection. It's another great example. We hit. I was maintaining since early on in this trade as I morphed it into a long-term swing and trend trade. A final price target of 490, not 491, not 489, 490 on natural gas futures. Well, natural gas futures hit that target, and it hit it on a Sunday night. I have it in here somewhere, and that gave natural gas traders an opportunity to exit. That must be on the previous day. A perfect exit point. And if you were trading UNG, guess what? You woke up the next morning and it was down quite a bit. You'd have missed an opportune exit point, and this is that right there. Again, it was on the site. So I made a point. You guys know, I don't, it's on vacation Friday. I made a point to post, get out of those crypto stocks if you wanted to, at those quick early profits that we had, quick gains. And this was at 7:30 at night in the evening on a Sunday. You don't get many posts from me on Sundays, especially at 7:30 at night, but I was very much invested heavily in this trade and had my alert set, had my sell limit order, and boom, it got hit. And so it was a great gift. And then I had it reversing, turned around, reversed, and made a short. And by the time natural gas opened the next morning, it had done just that. And so again, a futures trader, and you didn't have to be around at 7:30 in the evening on a Sunday night. You could have a sell limit order, as you should. And that was it. We hit it perfectly. And then the quick reversal. And again, I forget how much the give back was by the next morning when UNG opened up, but it was substantial. And that was it. That was the top. That was the day of the high right there. Let's see. UNG says March 10th. Oh yeah, because natural gas futures were higher on that whatever day I just showed you there, and then that gave us this pullback, and that's it. So let me move on and just share the again, if you're in a trade, I'll usually follow up with and this was the long-term charts at the time we were trading. We're in here. That was that long-term target I hit. Again, it was hitting the evening trading. And this was still, and that was my pullback target. Gave another chart right after, pullback to the uptrend line here. And then we would begin most likely another leg up. And that's where we're at now in natural gas. In this, I believe, could be wrong, but in this phase, that's how I'm treating it now. So that's longer term stuff. And oh yeah, there's the post that somebody asked about the futures. And so absolutely, just anytime, let me know. I trade a lot of different things here, and a lot of those things I trade do have futures contracts, and I'll usually, for both tax benefits and the reason I just stated, that's why I'm doing this long-winded video, that you have these. And especially with things like natural gas, I've noticed you have a lot of times my targets, price targets on pullbacks on shorts, or even re-entry points on longs, or bounce into resistant exit points. They happen outside of the regular trading hours, and which makes UNG almost impossible, especially if it's on, Sunday evening. There's no trading. I know some platforms are starting to trade certain stocks around the clock now, but even if it's 7:30 in the morning and you say, oh, it's pre-market trading, it's almost impossible to trade fast moving stuff in pre-market because you can't use limit orders. You have to use, you know, I'm sorry, you can't use market orders. You have to use limit orders. And then if you miss it and it's moving fast, you got to go in, retype, change your order, modify it. It's trust me, it's futile on a fast moving security. All right, so there's the here's the targets. I'm sorry, the 60-minute charts as per the request. I gave the ones I'm tracking 2-hour time frame and an 8-hour, meaning these are almost daily candles. They're 8-hour candles. They're 6.5 hours in a day, 18 months, and so this is pretty. This correlates with the resistance, the targets I just gave you on UNG. And then to take it a step further, somebody asked, no, it was in the next one. If we would, if I thought we'd have pull back, and so yeah, there it is. There's a decent chance, and we have what I call, most likely a momentum fueled overshoot, just one of the many terms I've made up over the years, and that is when you have something going near vertical, you tend to, that's a lot of momentum, a gap up, and it just smokes. The short sellers are getting rocked, smoked, getting covering, squeezed out. Longs want to chase it, pile in. And so the analogy I've always given is like a pitcher throwing a 90-plus mile fastball, going to hit the catcher's glove. His wrist is going to snap back. The whole glove is going to come back from the momentum of the ball hitting the glove at that force and then spring back forward, and that's what I call momentum fueled overshoot. So because it was pretty darn good resistance, especially seen better again on the futures contracts I just showed you. And then, to narrow it down, how do you trade those little momentum fueled overshoots? Well, I go down to a 5-minute chart, and I don't know if you can see it here. This is what I was trading today. Let me get the right drawing tools going here. You've got the uptrend line very, very well defined. Broke it there, had a little kickback rally at that point, put in divergence on this. It's just a 5-minute chart, and that was the technical catalyst for the pullback. So see, this was the momentum, what caused us to overshoot. And again, where to? That was, on the something along these lines would be great. Optimal if we hit it. Oh, I had hand drawn them in. You have a trend line here. That's your first support level. And then this would be a nice re-entry point if we get all the way back there, but we might not. Again, that plays into what I talked about before, where right here, you can see it well at this point. Natural gas, it doesn't always do this, but quite often it gets in this mode where it just doesn't once you have a bullish setup, it just doesn't let the shorts out easy. It just goes up and up and up, and then you get a little corrective wave, and then that one ended with a divergent high. There's another where it's in that rally mode, and it can just go up, 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 and then overbought just becomes more overbought. Sometimes it'll even burn right through divergences, negative divergences. I think you can see them. I had them. We still have, well, there's an example. We've now burned through that divergent high. I don't know if you've noticed the last few charts. I had the divergence drawn on there, but it really wasn't concerning me too much. Why? Small, again, scope of the pattern. This is a much bigger divergent low we're coming off of. Much more longer term bullish setup. Just kind of like the stock market. And the stock market will do this. I don't know if it's going to happen before Christmas. I know you've got that seasonality thing going, and somebody made mention today in the comments section they're going to cover their shorts. The market's so resilient. It is. It's very resilient. And again, I wouldn't, if anything, mild short now. But we're still, the high is still in, the recent high, the bearish engulfing candles. But it's just been very, very resilient. And again, that's a lot of seasonality here in the market. Here's that 60-minute chart, and same in the 5-minute chart I've been showing you. We've got we keep wedging up, and it's all there. This is the first divergent high, and we've had a few starts to that drop there. We broke the trend line, and again, I put a bigger weighting in the charts, what I see in the charts, than I do in seasonality or any fundamental reason why something should be going up or should be going down. charts are first and foremost. So I like to sniff out these divergent highs to close longs and or get short, and I like to sniff out these divergent lows to go long, as we did here and here, the two counter trend rallies along the way. And then we also covered there, that was when the final targets were hit on the things were hit on the daily time frame. And so, like I said, the technicals say we will probably have a correction, and we got plenty of time between now and December 31st. We can still have a Santa rally, still make new highs. We can burn through this, just like natural gas burn through those divergences. But like I said, these are the current technicals. They really haven't changed. That's that 5-minute chart I gave you. We hit the first target quickly. Yesterday I said I would give you a next sell signal. We broke there and we went down. We did. Once we broke that level yesterday morning that I gave you, we hit this T1 again. That's the same line, unadjusted. That's where I had it for T1, still support. And we now, of course, it goes without saying we have to break that as well. That's the next support. So that support was broken. We bounced, marginal new high, still a divergent high. And so we've had multiple tests of this level now. That was a momentum fueled overshoot. So we need to break that if we're going to hit these three. I still think we will. It's my guess. I'm not crazy from a longer term perspective of the resilience, but I've seen that before. This is very, very indicative of a toppy market. We've had a lot of wobbling, if you will, from the big tech stocks. There's huge divergence, and with Meta first rolling over, and now that's catching up. Apple was down, and then Apple caught up, made a new high. Nvidia is moving down. So this is what we saw here. It's very indicative of toppy action. But let me get to a couple other things for you and show you. Let me jump over to Bitcoin. Okay, because we're going to get to some of these Bitcoin proxies in a second here. But Bitcoin, this is another one where, my instinct, and we've had a lot of trades like this year, especially where, I might have additional targets. Everything's looking good, but then my gut says pull the plug. But again, it's more of I explained the reasoning. It was a quick jump up to that target. And we hit it again, and we've hit it several times, and we failed since then. So it's not over yet. This will be most likely, if those recent lows are taken out, or you get anywhere near them, you'll probably start to see all those that bought into this pop, especially the JCLs, I call them, Johnny Come Latelys, that didn't want to buy it here the day we bought it, but they wanted to buy here. They start to go underwater, and then it starts to snowball down. But let me segue over in just a second into the crypto proxies, because I want to do an update on that entire sector. So that starts me back here. Okay, so not so long ago, just a month and a half ago, October 16th, I did a video on the gaming and casino stocks plus the capital markets. So two different sectors. I wanted to cover that and just kind of do an update there, because I'm seeing some things that we're monitoring. Also some potential trade ideas. In this video, early in, when I was going over the gaming stocks, I went to Churchill Downs, and this is a great example of what I was just talking about. This stock, we went long right off the lows. I believe it was right at the lows. Like, I bought it because it was long-term support. Really like this one. Beautiful, beautiful chart. It was a very high probability entry, and they had such negative news that time. I remember they were talking about this big whole big funding plan, and the analysts, everyone on TV was negative, and so we jumped in and bought it and nailed that bottom, and then we hit that final target right there, potential target there. So 1, 2, 3. And in this video, that was October, what did I just say, 16th, I think, 15th, right there at the low, retesting that low exactly there. I said, this is right now my top pick, my favorite in the sector. You can go along here. You can use these price targets in reverse again as new price targets. And so, you're talking, this is swing and trend trading. That's a 30% run followed by a, and again, I made the case to not only, get out, but turn around short it. That was massive resistance, price and the 200-day moving averages. Fell back down, so 30 then becomes, again, if you did this, 25% drop, and now right back up, and now it's right for another short. Again, this is swing trading, wash, rinse, repeat. yes, this could be a big giant W pattern, very bullish if we break out there. So that's what stops are for, my friends. However, this one I believe is ripe for another short. Again, I'm sharing it. If you want to go long, wait for a solid breakout above there. You do have that spike high, but we've taken out the 200s now, and this would be your next target up here, target zone. However, I suspect, at least in the near term, this thing's getting very overbought again. We'll break this trend line. So it is a short setup or a short entry now here at resistance, my old T3. And or means maybe a half or partial position there, third, whatever your number is, and then a full position when the trend line breaks, targeting a minimum pullback to right there, 105, and that would give you again, that's a minimum. That would be a back test of the 200-day moving average, and that's about a 7.5, no, close 8% drop right there. Again, that's minimum. Now, the market buckles, starts rolling over when that level's hit. One trading strategy is lower your stops to a little bit above there when you're down here, and hold out and see if it can continue on down. Either way, I wanted to share that one with you. And now we'll roll into the sector that I wanted to cover, the capital markets. All right, so capital markets, capital markets. I can't type. I'm a horrible typist. All right, there's capital markets. This is a sector. Here's when I did the video. It was bearish on at the time. Obviously, lots changed. We did have a drop off those highs, which was a divergent high of about 15%, and we went on to hit the 200-day moving average. So similar to the markets, I showed you the S&P and the Wilshire, VTI. They all have those broadening wedge patterns. This is similar here. There's your next sell signal to come on a break of that trend line for the entire sector, that is. This was the last wedge right here. When it broke down, if you missed it, you had a back testing opportunity, 25% drop. And this one, again, bounced off the 200s. So next drop, if you take out the 200s, which I suspect you will, you're going to go down a lot more. But this has implications on the stock market. So what I'm going to do, as I often do, I have the list sorted right now by market cap. So you can see the big players: Morgan Stanley, Goldman Sachs, Charles Schwab, Robinhood, Raymond James, et cetera, et cetera. So we're going to go through those to kind of give a State of the Union address on how this sector is doing. The big names, of course, are doing very well. We know that. Somebody just asked about this one, I think yesterday, day before, Morgan Stanley. Big divergence. The chart's clear to me. It's in an uptrend. No sell signals. I believe this was my reply yesterday or the day before. Zero sell signals. But when it breaks this price channel it's in, this uptrend line, especially coming off that big divergent high, it'll be no different from this. The stock seemed resilient here, like it would go up forever. And then one day it just stopped going up. Then it broke trend, and the stock, from that point, it was a drop off that divergent high of about 34%. Ended with a divergent low, ended on April 6th when we covered all shorts, went hard long. And like everything else, there was 1,000,001 reasons, including but not limited to so many stocks hitting key support, and so many people thinking the world was going to come to an end because of Trump's ridiculous 300% tariffs, which I promised you would not last, would be walked back. And that's exactly what happened. And it's going to give us a hell of a run from there. But again, this has come full circle. That's all. So no sell signals now, but watch for it. And again, birds of a feather. There are sectors, ETFs for this. I'll get to that in a second. IAI is the broker dealers. There's a couple other ones. Another one for capital markets as well. I'll get to that in 1 second. Goldman, I just want to show you where they're all at. Same story. This is a divergent high, as that was a divergent high. Divergence is not a sell signal. I repeat, divergence, be it positive or bullish. Negative or positive divergence, which is bullish or bearish, bearish or bullish in that order, are not buy and sell signals. They are conditions, just like overbought and oversold are conditions. They are conditions that most often and usually will precede a trend change. Oversold, you get ready to buy, start getting ready to cover your shorts, but not on necessarily on the first tag. In a bull market, I say this often, overbought tends to, you see more frequent overbought conditions. You get extended, this is the overbought level, the red line. In a bull market, you tend to go much above it. And in bear markets, oversold is usually fleeting, one and done. This was an extended correction, real bear market back there, and you had multiple readings down there on the oversold side, right? And so what happens in a bull market, Usually that first overbought reading gives you a correction, needs to work off a little bit of those conditions, and then finally you start diverging. That's why I like to see divergence. So we had, by the way, as you saw, I just had marked, we had negative divergence right there, and we had a pretty healthy correction. That correction took us back to support, 753, and this uptrend line right here, and the 50-day moving average, a confluence of triple support, that's the yellow line, and we bounced. But what we've done since then is only made the divergence larger, just like we had negative divergence there, just like we had a correction there back to the 50 and the uptrend line, and then one more high, and ultimately sooner or later these divergences will play out, most likely, no guarantees, but most likely I'd say 90% probability. And then if you take out this level, 693, really good support, you're also going to take out the 200 days, and that's going to be quite bearish and send the stock much lower. That's Goldman Sachs. They go down, the financial sector is going down. I can all but guarantee you that. So watch it, replicate the trend lines, watch the 50, watch the support level. Schwab, divergent high, kind of moving sideways since, recent bounce off the 200s and price support. So this level needs to go, and then Schwab's going to come down probably at minimum to this long-term primary uptrend line here. And that, if so, that's going to give you a drop from where we're at today of about 25%. If Charles Schwab drops 25%, the stock market is going down with it. I can all but guarantee you that. So again, you have levels to watch. It's in an uptrend. You know where the sell signals are. So if you want to be that second mouse that gets the cheese, just wait for those to break. As I've been saying for weeks now, tech's been correcting, having an internal correction between, even the Mag 7, 8 are correcting. Some are correcting, some are going up. Semi, same story there. But until the financials break, the stock market will only go so low, and you're just going to continue to see that kind of rotation among the different sectors and among the key stocks. There's Robinhood. I'm going to go a little faster here so you can kind of see the big picture. Raymond James just tested the 200, still holding above them, price support. But coming off, all the technical postures are almost identical. These are the first divergent highs since those key April lows. That's it. We've come full circle. And whether we make it through the end of the year or not, I could flip a coin. Leaning towards the market, markets tend to like to catch people off guard, and everyone's expecting the Santa rally. And again, it's not going to surprise me at all if we get it. I'm not going to bet things hard either way on the broad markets. There's a lot of money to be made right now trading individual stocks, both long and short, because of this, dispersion right now between, a lot of sectors and key stocks and everything else. So trading the indexes has been pretty futile lately. Interactive brokers, I would have covered in that video. Again, what was that, October 16th here? I gave you 1, 2, 3 current targets and 2 additional targets potential. And what do? We hit my first target there to the button. A little overshot it. Again, a momentum fueled intraday overshoot, only to stick save, close back above it, give you an opportunity to exit, and we're back to the 50 now. The 50 is this yellow line, 50-day exponential moving average. As you can see, this stock loves its 50. It's in a bear market when it's below it. When it takes it back, like it did right here, that's bullish. And then what you do, it's simple. You buy pullbacks to the 50. It works until it doesn't work. When it stops working, recognize that trend indicator is flipped, and then you short rallies back into it. That's it. And if you short right now for the next leg down, you can have a tight stop. I wouldn't do it immediately above it. It's not unusual to break it intraday, only to, or a slight close above or below. But once it's clearly taken out, you see a big green candle blast through there, close solidly above, especially start building on that. Well, the 50's been taken back, and you're probably then, in this case, going to run back up and test, or maybe slightly take out those new highs. So there it is, both a trade setup and a trade update. And there's a little trend line to break too, and do that. Interactive brokers is not going to go here, or especially here, without this sector rolling over. So if you really want to do what I do, you get immersed in the sector. If you see this stock break down, you want to look, you maybe pause for a second instead of jumping the gun and look at Morgan Stanley, Goldman, Charles Schwab, Robinhood, Raymond James, all the other big ones in the sector. Because if they're all at support or above support, holding support, then you know what probably happens is Interactive Brokers breaks down and then reverses and the breakdown fails. So the more the key stocks in a sector break down with it, or have recently, maybe the day before, the week before, are on sell signals, the more likely that is going to play out. And again, you're still above those key 200-day moving averages as well. LPLA. All right, so what I'm going to do, let me flip it upside down now. What I'm going to do, what I mean by that is I want to show you what's going on in the sector. Instead of looking at the biggest names, let's go to the ones that are down today. And I'm going to show you kind of what's happening now. And you know me, I'm always, call me the glass half empty guy. There's a lot of froth in this market. I mean, I think we're at, I think we're at or near a historical inflection point in the market. So again, I've been saying that for a while, and it's a long-term macro call looking at a, decade plus bear market with huge, bull markets that are going to be within it, plenty of opportunities. And what I'm looking for, where the crack's going to come from. We started to see it recently in the BDCs. The stock market certainly wobbled. It gave us a big correction that we were able to trade. And we'll see if there are more roaches, like Jamie Dimon said, or just the two. So far, I and others think that more will probably pop up soon. But let's look at this sector. Again, I'm just sorting by today's losers. And I just want to show you what's going on. Now, some of these companies don't matter. You haven't heard of them. They don't move the needle. Some might, but collectively, a lot of these guys, especially in the capital markets sector, I start out with Goldman and Raymond James, all those. There's a lot of crypto only or blockchain oriented, Bitcoin related companies in here. And if you guys have heard me say this once, if you followed me for a while, if you've heard me say it once, you've heard me say it a million times. Done this for a very long time, this thing called trading and investing and technical analysis. And I've always said that parabolic uptrends just typically don't end well. I've never seen one yet that ended well. Meaning you don't go up parabolic and correct like this and then continue on up. Parabolic uptrends usually result in a crash. And that's what I'm seeing a lot of these stocks. And it's concerning because I think Bitcoin, there's a lot of bubbles going on right now, but Bitcoin was one of the earliest and biggest in this latter stages of the bull market that we're in right now. And so a lot of these are, related to Bitcoin type things. And again, you can see, technically speaking, that just blasted right through there maybe. And that wasn't a momentum fueled overshoot either. This was a lot of momentum going down, but then you hit it and you consolidated there. And for months you held on that key. That's a massive, massive support level. We just took it out. So a lot of these companies are probably headed to bankruptcyville. And so watch this sector. That's all I would say. And then if enough of these little guys blow up, it may have ripple effects throughout the sector that spills over into the bigger ones. AXG, I don't see much there. ARBK, Argo Blockchain. This one's on its way to, these stocks are going to zero. When you're already, when you lose the $1 share price, it's such a key level because you face a delisting if a company can't get its stock price back $1. And typically in your penny stock, usually stocks that get down here are gone. That's it. It won't go, within the next year or so, you'll hear this one will be delisted and then it'll go away to nowhereville. So, people lost everything on it. And again, it's another one of these many Johnny-come-lately blockchain, and you can see the technicals warned you. If you were in this and you liked this company back here, that was a key support level. That's where you should have got out. And if you didn't, because you did what a lot of retail investors do, called buy and hope. Instead of buy and hold, they do buy and hope. It goes down, they hope that it's going to come back. You had a gift. I wish I would have saw this one back there at 94. Maybe I did cover it in another video. I don't know. That would have been a golden exit opportunity for you on the back test of that super duper well-defined resistance level. And now from there, and it's all gone. It's about 100% drop. 90. When you get approach 100%, you never hit 100% on a downside move. 82, 83 right now. MIGI. All right, I'll go through these a little faster, but again, parabolic uptrends just don't end well. This is what that is. Make no mistake about it. You got the uptrend, and you have to start doing an upward sloping trend line that goes vertical. That's what happens. And there's, I've seen a lot of stocks go parabolic recently. Here's one. It did it before once here, and it's still going down from there. We're down 95% from that point. All right, XP. And I'm doing this. Maybe you guys know some of these stocks or have some of these big resistance there. 200 days, it keeps grabbing the 200s. It took them back here after taking them out here, and that's entered that bear market. Took them out, lost the 200s, rejected. Finally recovered them here. It's been back testing. So once it clearly loses these, that's bearish. If it can break up there and take out that uptrend line, well, that's bullish. I don't know what they do, their specific business model. They're in this is a broad, sector. DFT, I don't have much on that. It's just stocks like this, that's just a short covering rally. This thing dipped below $1. Companies will defend to their best of their ability that $1 level. The insiders will buy, they'll reverse stocks, but they'll do whatever they can to keep it above to avoid a delisting notice. And so that's all. You'll see that usually when you drop below. But if they can't hold it so far, well, we're at 120 right now. I don't have much of a read on this chart. You can just, this was in the hype. Everything, they went public earlier this year, and the poor sucker that bought the day of the IPO there is now down 80. Or I'm sorry, they were down 80%. They're at the moment down 76. ABTC, American Bitcoin. This is the little Trump boys venture here. I think which two? Not Donald, Eric, and one. I don't know, two of them. And they hold. I highlighted this one the other day on my crypto video. It's insane, the market capitalization of this company compared to the amount of Bitcoin that they hold. So this is another one that eventually I think goes to the wayside. But either way, they're selling it hard. That was the big drop here was when the lockup was over, and so the early investors got to sell, and boy did they sold hard that day. I already covered that one. Down to support, bounce back to resistance, still below. CLSK, what's that? Clean Spark, breakdown back tests, just ugly, kind of, these are volatile little suckers. It looks like an EKG. I mean, this thing, rallied. Let's just measure it out from $9. It shot up here. That was 164%. Turned around, broke the trend line, and dropped back down to where it was, 61%. Been all over the place. This one's going, looks like it's another one that a lot of these you see when there's no trading history before. That's usually typically they come out as an IPO, and it's just, again, poor sucker that bought that on day one has now lost 80% of their money. BBT, Bit Digital. Okay, you get the picture. These guys, a lot of these things are just going away now. So we'll see if it lasts. But BTM, GLXY, Hive. Okay, so this is one that we bought the other day, a couple weeks ago. Bitcoin, everything at the low right there. Got out T1, and I give you my preference to book that quick. Get out, get the quick whatever. I think this one was 25%. Yeah, about 25. Mara, this one also, same thing. We went long on support that day, that morning, jumped about 27%, and it's still struggling with that resistance level. If Bitcoin can power on up, it will. These guys will probably see those next targets I gave you. So I left them there. If you're bullish, I told you my thoughts on it. BITF, Bitfarms, breakdown, bounce off support, but again, just a lot of these related stocks. And again, I'm still in that larger capital markets, as you can see up here, subsector, sector, if you will. But a lot of these, especially these crypto-related ones, are singing a whole different song than the big names. And again, they are lower, more speculative. Basically, what you're looking at, I guess, guys, what prompted me to do the video, when I look at this, it so much reminds me, because I was around in the 90s during the dot-com bubble, and anything with the name .com was going up. And then those that came to market late 1999, the bubble burst in March of 2000. That was the top of the NASDAQ. And so this is very similar to those stocks that came to the party, IPOs that came out late. And there was a whole lot of them. A lot of them come to market. So there's Robinhood. A lot of downside in this one. This was one of my top picks when the bear market does hit. I think Robinhood will just get clobbered, is my take, based on the type of clientele that it attracted. Those cell phone traders, meme stock traders, and crypto traders, and everything of that nature. Siebert Financial. All right, I can't go through them all. Riot, this is the other one we took here at the lows a couple weeks ago. That was the day that one hit T2 at the time the other ones hit. That was a 38% pop. Quick get out, sidestep. If you sold it there, that was the Friday after Thanksgiving. You're already sidestepped an 11% give back. And if you're bullish, guess what? If you sold it there and you plan to, you believe there's going to be another leg up, well, T1 was resistance, now support, and you can swing it up to what was the potential third target. But if not, my guess is this just a counter trend bounce and oversold bounce in Bitcoin. I'm probably going to go down. And then on that, let me leave it one last thing. I know I'm throwing a lot out to you. Bitcoin and the market. So let's do we'll do IBT, IT. This is the kind of the go-to. Let me turn off all the drawings here. So what you look at, compare it to the market. And again, if somebody says the word to risk on or speculative asset, the things that come to mind, at least to me, are Bitcoin, anything to do with AI, meme stocks, generally the NASDAQ. The NASDAQ doesn't have financials. It lacks a lot of all the granny stuff that's in the S&P 500, grandma sectors and stocks. A lot of, S&P 500 is chock full of healthcare, defensive issues, utilities, financials. And the NASDAQ is mostly a tech index. So that's why I put up QQQ. And you can see that, Bitcoin is typically, there's been periods where it's a risk off asset, but it's almost been in lockstep with the NASDAQ 100. Don't look at the difference in where the lines are. Just look at when they're both going up and then when they inflect, when they go down. White line is QQQ. The candlesticks are IBIT. And so you can see it. They've moved in almost perfect lockstep, up and down, up and down. But now lately, right here, Bitcoin peaked. And the NASDAQ started to follow down, was a little worried, and then it started to say, you know what, we'll do it. Oh, no, they both rallied there. And then they both started correcting. They've been moving, but you can see you're getting these larger drops. Bitcoin's down a whole lot more. And you can see the market's rallied. It's been risk on again since this point right here. Remember, we traded this correction down with near impunity. And then, it's bounced. It's gone a little farther than I thought it would. And the $1 million question is Bitcoin done? If my read is correct, and it is, then we're going to go down. That's probably going to pull the NASDAQ down with it. You've got that pesky little thing called seasonality, which I've already addressed. It makes trading a little more difficult. A lot of money flowing into the market, 401k contributions, window dressing at the end of the year, all that other stuff. So like I said, it's a matter of, we're going to go up, drift up, have a little Santa rally, and then go down first quarter, or is it going to happen before then? So either way, watch this. And I guess a takeaway then, guys, instead of me just saying, oh yeah, we could, market could top now or in a few weeks. Again, I see minimal upside. At best, I see a marginal new high in the NASDAQ. But Bitcoin, watch Bitcoin is what I'm getting at here. Because if Bitcoin, let me turn off the comparison. If Bitcoin starts really snowballing down, if my read is correct, and this was just a reflexive oversold bounce with another leg down still to come, which is, again, my next target. I think you do. It's down here, my next target zone. That will most likely bring the NASDAQ 100 and the stock market down with it, if that happens. Okay, sorry I had to take an important phone call there. I had paused the video trying to collect my thoughts where I'm at. And look, guys, it wouldn't surprise me either if we do go up to that former T3. It's a really nice bounce target if this market, especially if we get the Santa rally coming in the stock market, because you've got, this is the 200-day moving averages. We lost them here again, which also speaks to the longer term outlook of Bitcoin. But a back test would be, an objective, really objective exit point for those of you still long, or a short entry, as would any move, even if it wants to overshoot them a little bit. This was big support. That's why I had it color coded green. It was those previous highs. Then we took out that level along with the primary uptrend line. And so this would be right here, my maximum bounce target zone, where I think that if we do go that high, it would be an objective level to close out any longs in Bitcoin or Bitcoin proxies that you have. Also to, again, if the charts confirm, I'd like to see some confirmation on the 60-minute charts, maybe daily charts. I'll look at Bitcoin futures, the actual Bitcoin crypto. I look at all those things, not just one ETF that's been around for not even 2 years now. All right, I'm going to wrap it up here. Get the video out to you guys. This has been Randy Finney with the Right Side of the Chart. Have a great weekend.